How are the shockwaves of the most recent bank failures going to affect you in 2023 and moving forward? Hi, this is Jason Daniels with Finch & Gable Real Estate, and today we want to take a little bit of a look at how are these bank failures that everyone's talking about going to affect you personally. Well, many people have their money invested in the stock market. Many people have investments all over the place, but when it comes down to it, what we're seeing is the government is controlling the market by playing with the Fed interest rates. And as we all know from what we've heard is as interest rates have gone up, people are diversifying their investments and people are purchasing less. They're trying to tighten the cash flow to reduce the economy's growth and of inflation. So they are artificially trying to change a market that is, there's so much power and force behind it. It's been artificially controlled since the last meltdown recovery. We've seen a 10-year run up from 2012 to 2022. And we're starting to see the seams of a bursting economy with these two bank failures. Now, that's my personal opinion. So what does that mean for you, and how can you protect your retirement? Well, when we look at the last 20 or 30 years of real estate investments versus the stock market, real estate has just outperformed. And right now, because this is not a real estate-led issue that I think that's going to come down the line, it's more of a Wall Street and the government playing with interest rates. I think the real estate investment is going to be a lot safer than investing in stocks and different other investments. Now, the two banks that failed had over leveraged themselves. You know, there's a whole bunch of articles I'm sure you read online about the details. I'm not going to go into the nitty gritty. However, when we look at regular investments in the stock market or versus just obviously putting your money in a savings account is still not going to get you that great of a return. Again, make sure you pay attention to how much money you actually have in a bank account. A good reminder that $250,000 is insured by the federal government for credit unions and for banks. So if you are, blessed enough to have saved money and have that much, spread it out over a couple different banks. However, I prefer personally for myself, I don't keep a lot of cash in bank accounts. I invest in real estate. I do have some diversity as well. So have diversity. I'm not a licensed financial advisor, so there's my disclaimer. But when we look at a trend, many charts that you can find online, real estate has outperformed the stock market over time. And anything that we see that's going to happen is going to be temporary. But I feel like there's going to be some larger consequence that's coming down the line later this summer or even this fall if there's runs on banks. So I know the government's worked hard to try and prevent any future bank runs and bank collapses this year. However, it's almost like trying to cork up a volcano. At some point, I think it's going to erupt and we're going to have the consequences from all this pent-up manipulation of the market. So how can you best protect yourself? I personally believe if you invest in real estate, right now it's going to be the safest bet because right now there's still a shortage of housing, especially here in Colorado. Now, there may be other areas in the country where real estate is kind of on the downtrend, but right here along the Front Range in Colorado, real estate is still appreciating. Just the last couple months, a lot of our homes that we've sold, we've had multiple offers. The last home we had 7 offers. Well, the one I sold before that recently had 4 offers. So we're seeing a huge demand even with the spike in interest rates. So when we look at stocks versus real estate from an investment standpoint, not just living in the home, when you live in a home right now, it's about the same price to buy a home versus rent a home. So if you're living in a home, that's a great investment. Also, if you have cash available in a bank and you want to invest, now is still a good time to take that money out and invest in real estate. And why is it a better investment? Because if you're just buying stocks and cash, many banks aren't going to give you loans to go buy stock or buy pieces of the S&P 500. But you can go to a bank today with 20% down, and if you have $100,000, if you're buying stocks, you can buy $100,000 worth of stocks or bonds or mutual funds. And that's it. It's $100,000. You're going to get your standard rate of return, which, by the way, is under 9% over the last 20 years, whereas real estate is closer to a 10% return. And that's if you just paid cash for a $100,000 home, if you could find one. However, if you take that same $100,000, you get a loan, you can buy now a $500,000 asset with 20% down, put a tenant in the home to pay your rent, pay the mortgage, number one, they're paying your mortgage, and number two, you're getting the annual return on a $500,000. So you've now taken that $100,000 investment, and if you've now quadrupled the amount of appreciation on that over time. Now, real estate has appreciated over time 10% or more in the major cities in the United States. Now, there's been bursts and bubbles, but that's why I say over time, 7 to 10 years. So this is not a short-term get-rich-quick scheme, but you can protect that nest egg. The third great reason why real estate is amazing is because you can take tax deductions and get your tax basis reduced. You're going to be able to deduct the structure on any property over 27 and a half years. And if you know how to use bonus depreciation, you can take that up front when you purchase it. So there's a lot of tips and things that you can do to really reduce your tax liability, but also take that money and then quadruple the earnings on it. There's nowhere else in the world other investments that are like real estate. And right now, real estate is still a good investment. It's not this potential, recession is not going to be started by real estate like it was in 2008. There was an overabundance of inventory. We do not have enough inventory today here along the Front Range in Colorado. So that's why I believe real estate's strong. If you have any questions, please reach out. We've worked with investors for over 20 years. I have one investor who increased his net worth by $1 million, bought 6 homes over a 2-year period, and within 3 years, that individual's net worth is now $1 million more than it was before by simply taking some investments out of the stock market and putting it into real estate. And I can help you do the same. We can do that here at Finch & Gable for you. By the way, happy St. Patrick's Day. That's why I'm wearing a hat. It's your lucky day. Talk to me if you want to invest in real estate, and we'll help you protect your investment. Thanks for watching. We'll see you on the next video.